And I believe that you can hear me well, right? And it's always a pleasure for me to have you up. Let me just turn a little bit of music. I think a little bit of music is not bad, but yes. So welcome back, everybody. So welcome back to Renewables in Africa, and welcome back to our platform. So climate change is one of the most pressing challenges facing our world today. And as the calls grow louder for businesses but also government to accelerate the transition to net zero emissions. You have new emissions, in climate technology and financing that are emerging. And one huge area is actually leveraging fintech, to modernize and scale carbon and environmental social governance, ESG markets, by digitizing, but also automating the measurement, the trading, the financing of emissions reduction and carbon credits. Fintech promises to connect stakeholders and unlock capital to flow towards climate solutions. And to explore this high impact area of climate fintech, I'm actually thrilled today to speak to somebody I spoke to a couple of years ago. Is Hirander Misra, right? And Hirander is an acclaimed fintech entrepreneur who's now supplying his expertise to tackle, the climate crisis through the latest venture. So 013, yeah. So what is it? You're going to find out about it. So Hirander is a chairman and CEO of GMX Group. It's a leading fintech provider of exchanges, but also post-trade infrastructure. So he's also the founder of 013, yeah. It's a climate fintech startup on a mission to accelerate the transition toward the net zero economy. So what is that they do? So this is what we're going to find out today. But they're actually leveraging, innovation in AI, in blockchain, and carbon credit digitization. And 013, what they do, they interconnect the entire carbon and broader ESG marketplace to automate and scale trusted trading and investment. Whoa, I'm sure he's going to give you a lot more information than what I'll say right now. But I'm excited, really excited to dive into that, to hear the inspiration of founding 013, that unique solution it provides, and also understand a little bit his vision for the future of climate action, with financial market. So thank you very much, Hirander. So let me just bring you on stage so that we can see you properly. So welcome back. Let me just stop the music so that we can hear you properly here. So how are you doing so far?
Very well, Tony. It's a pleasure to be back and to liaise with you again and engage with the audience. Really looking forward to it.
Excellent. I think the last time we spoke, I think it was probably like 2 or 3 years ago, right? And you already had something quite exciting to bring, and I think you're bringing something else again. So I'm thrilled just to see that. It looks like every time I've seen you, there's a new innovation.
Yeah, no, it's always good because we've got to keep moving with the times. I remember last time we spoke, it was in the heart of the pandemic, so it was a different kind of conversation. But it's good to see that things are happening again, and really looking forward to COP28 coming up shortly in the UAE as well.
Yeah, but that's what it should be. So before we dive into understanding a bit more about 013 and everything that you've done with GMX, so I would be happy if you can broadly just introduce yourself so that people really understand. So who is Hirander? What is that you're doing? Yeah, so a little bit of story about your journey.
Yeah, no, thank you. So my background is 28 years in brokerage, electronic trading, exchanges. Originally, actually did an undergraduate at the London School of Economics in economic history, and then went in and joined Reuters, which is a Refinitiv business on data under London Stock Exchange now. And then quite quickly got interested in technology because I found the business people didn't know about the technology, and the technology people didn't know about the business. So then ended up doing a master's in business systems analysis and design at City University in London. And from that time, I've never really looked back because everything we're doing, even in this day and age, is all about business being enabled by technology and having knowledge of both. So I think with that backdrop, then co-founded a platform called Kayax Europe, which took on the equities trading from the major exchanges and got liquidity with all the banks and large electronic market makers becoming shareholders. And then started GMX when we exited that to what is now CBOE markets 12 years ago. And as you rightly said, we're enabling exchanges all over the world across asset classes. So, in an area relevant to you, India's LNG exchange, under Indian Energy Exchange called Indian Gas Exchange, runs on our technology. But then so do financial markets like Vietnam's derivatives exchange and digital asset markets. Now, why 013? It's really, really interesting because we had a number of players coming to us, countries, and also organizations saying, we want to set up a carbon exchange or a climate exchange. When we looked at it, we said, well, actually, it's a little bit like the cart before the horse, right? Because there are multiple registries. There's more coming because, as you know, Tony, I mean, you're engaged heavily across Africa. A number of governments want to set up their own carbon registries. There are lots of players where the market's over the counter or there's new exchanges emerging. And there's lots of services being offered in this space, but it's all fragmented. So we realized the infrastructure that we built for digital assets lent itself really well to address this climate problem. And that's where we've launched 013.
Okay, that's brilliant to understand. And before I dive into the question, I'm just going to say, so for people watching, don't hesitate to ask question if you have direct question. I think I'm sure so Hirander will be very happy to answer those. But let me first of all invite you, Hirander. I think you have a short presentation that we're going to run for us. That's going to give us a little bit of a context so that people understand what we're talking about this morning, and we then can take it further from there. So let me just bring the presentations, and I'm just going to be on backstage. So yeah.
Yeah, absolutely. So he said, how do we decarbonize finance, and how does fintech play a role in this? And we're just going to quickly run through this and just talk about, set the context for the audience of the market problem, and then how we're solving it, and the benefits as well. And then, of course, we'll move to a wider discussion with Tony in a Q&A. So there are three core problems in the carbon credits market, and they're all related. Now, key players all operate in silos. So the registries don't talk to each other. The registries aren't really connected to exchanges. Different players are doing their own thing. This has become even more of a problem now when markets have started to digitize using blockchain and other means, because everyone looks at blockchain as one ubiquitous technology, but there are hundreds of blockchains out there. So on the one hand, you've got very manual markets. On the other hand, you've got markets that might have messaging through application program interfaces, and registries as well. And now you've got blockchain-based platforms, and nothing really interconnects or talks to each other. So, and the market's primarily over the counter. So there's a need for common market infrastructure. So how do we solve that? We've got an orchestration layer in the middle of that can connect multiple registries, multiple custodians, multiple participants, but also interconnect services as well. So really, the way that we see that is a network of networks, because we respect the fact that ecosystems exist. Exchanges are an ecosystem in their own right. There are registries that have their own ecosystem, but whether it's via API or whether it's via blockchain, we've got the means to now interconnect this. And that's really relevant because at national level, governments are looking to set up registries, set up exchanges, but the liquidity in terms of supply projects could be in one country. Let's say take an African country or in any African country, for example, but the buyers might be in the Middle East, for example, the GCC countries that are oil producers, whether it's the United Arab Emirates or whether it's Saudi Arabia. So the problem is it's not a two-way market in any one place. So the ability to interconnect the supply with the demand, but keep the ecosystems in their own countries becomes very, very important. So, as we move ahead, then, that's kind of addressed the second problem, or addressing it in terms of integrity. Now, there's been no secret in the news. The Guardian newspaper in the UK has spoken about carbon credits and, certain carbon credits being worthless because they didn't transpire to have the value that was there, because trees weren't planted or forest that was supposed to be preserved wasn't preserved or wasn't there. There were fraudulent credits. That's impacted the integrity of the market. But really, technology as an enabler can digitize this, because now you have various means to digitize, measure, report and verify, or demerve as we call it. When you bring that in, you can have full provenance from source using blockchain, but also using IoT. So it could be a combination of satellite, it could be a combination of sensoring, drones, a range of technologies, and whether that's for forestry projects, or whether that's for commercial buildings and energy efficiency improvement, whether it's regenerative agriculture, the technology is very much there. So once we have an end-to-end process, that encourages integrity, and because the processes are interconnected from source all the way through to the market, you can see the provenance of this and you can trace that, and that instills trust. The third issue is supply. Now, the lower end of the market, because it's been very manual, has collapsed. But actually, the trusted end of the market, where these problems are being addressed through digitization, is actually attracting premium prices. So there is rapidly growing demand. People say there isn't demand. There is, but it's for the right sorts of credits. There's no demand for the wrong sorts of credits, because they'll be proven worthless. But for the right types of credits that are digitized, there is growing demand. We're seeing that by market examples, like Barclays have recently set up a carbon desk after a 10-year hiatus. Now, the banks wouldn't be coming back into this market on the secondary trading side if there wasn't demand. And obviously, the large corporates want to buy with trust. So building that integrity with a way that redresses greenwashing, solves the double counting problem where credits are being bought and then for offsets and then are not retired. Now we can trace all of this through the 013 ecosystem. So just to conclude, before we hand back to Tony, this is a high-level view of the ecosystem, but if you look at the left-hand side, you have the verifiers, you have the systems with the demerves that I spoke about, with the projects to the extreme left. And then you have the carbon registries. Now, we have the ability to connect digital registries or even digitize existing ones. And then the key here is, when the assets are in the registries, how do we make them available to trade? Because there are many registries and there are many markets, or there could be individual players. So the great thing is, a year ago, or just over a year ago, we acquired an asset, Pictor, from ING Bank, and that's a decentralized custody and settlement network. Think of it as an escrow network where the assets can be locked, but they don't move from the registries, or if the custodians are holding them, and they can be pledged or made available to trade in markets. And once they trade, they can be unlocked, and then the registry records can update. So this hub and spoke model allows primary financing to connect, and that could be digital because we're integrating deposit tokens from the banks and other forms of stable coins, but it can also be fiat on account. And that allows then that money to then go against assets that are being bought, but ahead of that, projects that are financed, that are in turn digitized. There's a lot of work that's been done on forward contracts with the International Swaps and Derivatives Association, because standards are very important. So a toolbox of standards on the supply side is important, because one type of standard might be suitable for one country or its projects, or a range of projects, another standard for other countries. So flexibility is also very important that we address. And on that note, I'll conclude, but over to you, Tony, and then over to the audience for any questions.
Excellent. Thank you very much for that. I really do appreciate. So I just wanted to ask one first questions, and which is, what inspired you to actually create 013 to focus on climate fintech? Would you say? Because I think you're already very busy with other things. So yeah. So why did you feel like you had to come back to, or maybe to create an additional solution in here?
Yeah, it's interesting, because what we ended up doing here was we realized, we got into digital assets almost second wave, because we realized, a lot of this hype cycle that we've seen, and digital apes and everything else that was in the market wasn't the way to go. And we realized, how do we ensure regulation and integrity? So we got into digital assets in 2017 by enabling them as a venue, and then realized that venues needed to connect to assets and then connect it to custodians. Like TP ICAP, the world's largest interdealer broker, runs on our technology. And then the eureka moment was this approach from carbon markets and players, because we realized actually a carbon market in its own right is just a piece of technology. Attracting buyers and sellers there when the liquidity on the supply side, the demand, the money can be all in different places is very, very difficult. And actually, it's not as if, I know some exchanges are out there, they're trying to fulfill important functions. The liquidity is always going to be fragmented, because you and I might trade between ourselves, or we might choose to go to a market to trade. We might choose a number of registries. So we realized actually all the infrastructure that we built from 2017, when we got into 013 last year, lent itself really well to address the problems that I've just highlighted in my presentation. And very quickly we realized actually the eureka moment was, everyone was speaking about digital assets and tokenizing securities or non-fungible tokens for things like art. But we actually realized that the biggest use of this technology was this problem in climate markets. There couldn't be a better use case actually than this, given the challenges and also the fact that actually as a result, it could lead to massive benefit. One, address, as you rightly said, the climate change problem. Two, a lot of the benefits could then go upstream to get better prices. One, get capital for community-driven projects. And also, there's always new terms like the Global South being one that's been coined now for these countries that are developing. So much needed capital in there, a way of tracing that in terms of how it's deployed into the community, but also get better prices for those credits because they've been depressed because of too many middlemen, where good middlemen certainly add value. And that's where we came up with 013. And, since then, actually, it's probably been the best move that we've made, because rather than going from that being, let's say, 10% of our focus 18 months ago, where we were just enabling exchanges in this place, it's 80% of our focus now and increasing.
Okay, that's excellent. So I can see there's a couple of people that joined into the link. So let me just see if I can bring one of them. And as Anne, I don't know if she could. Anne, can you hear us? I don't think she is, or maybe just audio. Can you hear me, Anne?
Yes, I can hear you.
Okay. So do you have? We can't see on. You don't have your camera playing, isn't it?
No, my camera is not playing because I was
No.
just joining in to listen in.
No problem. Do you have a specific question for Hirander?
No, actually.
Or is it
Not
always
really.
me?
No,
No problem. If you have any questions, feel free
no
to.
questions. I'm just joining to listen in, so I'm
Okay.
good. I'm good.
Okay,
Yeah,
that's
I'm
fine.
good.
I
Thank
think
you.
that's okay. I think we have as well Jinesh. Jinesh, same for you. You also joined to listen in.
Hi. Sorry. No, it's nice to hear both of you, especially coming from the Africa sector, which is good. One question which I always try to understand is the standard side. Who's going to drive that? And that's is always puzzling for me. I don't know if either one of you could probably guide us which way it will go in future.
Okay, excellent. Hirander, please.
Yeah, it's really interesting because if you look at the origination of all the current modern day standards, I mean, they originated from like UNFCCC and that side of things. And then obviously there's been variations of that because, there's been various standards introduced, registries have embraced standards now. So actually we're at a stage now, unfortunately, where standards, I almost call them, they're like boxing organizations. There's too many of them out there, but actually, essentially, they should be doing the same thing because it shouldn't be, rocket science. And so, what we're increasingly beginning to see is, yes, there are multiple standards. I don't think there can be in the near term a one-size-fits-all solution because, there's always going to be a preference for certain standards and also linked to that certain registries as well. And certainly, as you may know, governments are looking to set up their own. There's been no public secret. Some of those in Africa have announced intentions to do so. Whether it's the likes of Kenya and others included as well. And that's a good thing. So really, what we do is we say, well, actually, there is no one size fits all, but actually we can provide a multiple of standards, whether it's digital measurement, reporting, verification standards that come into the platform. We can also provide access to a range of registries, but if you have your own or you want a registry set up, we can also enable this. So there's a level of flexibility there. I think the key here is the standards that are going to succeed are those that embrace digitization. We're already seeing that with some of the traditional registries now. They're beginning to realize with the problems that they've had, that digitization is key, because how can you measure the impact of forestry projects when there's people coming in with tape measures and clipboards and knocking on trees? When you have technology these days, from satellite drone sensor technology that can more accurately measure that. So I think we're gonna see that, but then at country level. There's a couple of different things there. The governance becomes very important. Yes, more broadly, voluntary carbon credits are an unregulated asset class, but to instill trust, countries need the right governance framework. And that obviously now, if you look at Abu Dhabi and Abu Dhabi Global Market have even introduced regulations under the Financial Services Regulatory Authority to say, okay, the market's unregulated, but we're going to be the flag bearers to regulate this. And it's certainly interesting to see acts emerging. I've read the one in Kenya, I read the one in Zambia and other places. It's encouraging to see that governance is being considered. From that, good regulations are going to emerge. But the problem you then have is if Kenya or Zambia say, well, this is our set of standards and this is our regulation. Now, they, even if, these are very, very credible countries, but even if they're doing the right thing, which they will do, others externally will say, well, how do I know that the credits are being measured correctly? How do I know the quantity of credits is right, etc.? And this is where international validation becomes very, very important as well. And that's what we can orchestrate because, as we said, things will happen and need to happen in Africa itself at a country level because, there's too much that's been happening in centers away from Africa, but then they can also now, using other standards, be international validation, which then means the corporates that are buying those credits have trust.
Excellent. Thank you. Hopefully
thanks for that.
Thank you, Jinesh, for connecting. We appreciate that. Thank you very much. Appreciate that. So I think I have Drupun, if he's connected, or he or she, I don't know. So Drupun, can you hear us?
Yes, hi.
Yes, how are
Tony.
you?
Hi, Helen.
Very
Fine,
good,
thank
very
you.
good. Thank you for connecting. So do you have a question for Hirander?
I do actually. One thing that a big advantage which I can see with this sort of a platform is getting better value. So is it correct for me to understand that because of the transparency and digitalization of the carbon credit measurement, validation and stuff, do credits that would be available on the 013 hub attract better pricing for the from the markets as opposed to other credits from other registries and stuff?
Yeah, this is an excellent question, Drippen. And there's two elements to it, because one is better access to finance. I'm going to be provocative here, and I would say, I spend a lot of time in emerging markets, specifically Africa, engaged, right? And there's complaints that our credits are at the wrong. I mean, our credit rating is worse than where we think it should be, given the state of our economies and our economic well-being. So, we're paying more for credit here. So access to finance, we know, is expensive in emerging economies. It shouldn't necessarily be the case. So one thing it facilitates is the ability to harness a range of financing platforms that can connect in, which allows those projects to access primary financing more easily and at better rates. Because effectively what you're doing now is the projects are very transparent. You're reducing the risk of those projects not being what they say they are on the tin. And this also then means that there's more appetite to invest at better rates. So one is then the primary side. The other side of this you're absolutely right. I would argue that because the markets are so opaque and there's a lack of transparency, everyone says yes, but there's more risk in Africa or other emerging markets. Therefore, the credits are going to be cheaper value than equivalent Western credits. Well, actually, we know for sure there's projects that we're working with, that have really tangible community development here, producing biogas, community driven from animal waste, for example. Now, those credits are being sold by the communities for $3, right? And this is a live example. A broker in London is selling them to another broker for £7. That broker is selling them to its clients to reduce scope 3 emissions, and that's being sold for £9. So let's say it's around $11. So is it the credits that are lower value, or is it the fact that now there's too many players in the chain who are benefiting from that? Because the community that took the risk is only getting $3, whereas there's been 2 transactions at £7 and at £9, and the community doesn't see any of that benefit. So I think if we kill the goose that lays the golden egg, we will have no more projects, and there's a wider consideration here, because really, if you look at many African countries, they can be the breadbasket for the world. And we know food security, whether we look at the GCC countries, whether it's Saudi Arabia, whether it's Abu Dhabi and the UAE as a whole, is very, very important. And there's also water scarcity as well. So water, energy, and food are key considerations. And of course, what we're discussing with carbon credits is one factor of that. Now, how do we get better prices? All of a sudden, from an opaque market, if it's digitized, if there are competing buyers now for those assets, one, we know where the price is. Two, you can run an effective pricing mechanism where the best pricing, because of that demand, can be matched with supply, getting a better price for those credits.
Excellent. Thank you very much for that. So Drupal, thank you for connecting. We appreciate that, and then keep on doing it, keeping on sharing. We appreciate that. Thank you very much. Where are you coming from today, Drupal?
I'm calling from Nairobi, Kenya.
Nairobi, Kenya. Excellent. Brilliant. So I have another questions that are from Oluwacho9. He said that, what role does consumer awareness and education play in the success of fintech-driven sustainable finance initiatives? So, yeah.
This is an excellent question, actually, because the problem is, this area is new, right? And even really recently, we've had a lot of interest even from the banking side with what we're doing, and even they're saying, educate us, run a workshop for us, educate us. So if the banks are kind of looking at this saying, okay, how do we get involved in this and what do we do, then it's going to be even harder for consumers on the one hand. So education plays a key part in that, and that's at a couple of levels, because if you look at the supply side of this, then education on the ground is very, very important, because recently I was in Tamil Nadu in India on a business trip, and there, yes, they're doing a huge amount on the renewable energy side, if you look at solar and hydro. But there's also, there's mono agriculture that's large scale, but it's also smallholder agriculture, which, as you know, Tony, is prevalent across Africa and very, very relevant. Now, if you're a smallholder farmer, you're kind of saying, on the one hand, yes, I can embrace regenerative agricultural practices, but you're not even thinking about carbon credits. You probably don't even know what they are. Yet, if you're embracing regenerative agriculture, or if you're organic farming, then there's an opportunity for you to monetize what you're doing. So what we're now seeing is in the case of Zambia and other places. We're engaged at the level of community development, and that can be through various means. It can be cooperatives, or in the case of Zambia, you have a kind of chief system, and then that goes into the sub chiefs, and then the village elders, and so forth. A bit like M-Pesa, educated use in Kenya, because again, it propagated through the village elders and the village heads into the community, and there were education sessions on the ground. So I think some of this is very, very important. But then, on the other hand, we as consumers, we're also emitters by virtue of our purchasing that we do, because we buy products that have a carbon footprint, or they can have a water footprint. The trainers that we wear, or the t-shirts that we wear. So, how do we better measure that, and what do we do about it? So one of the examples is, you get on a flight. Sometimes certain airlines, you pick up the magazine or you look at the app, they say offset your carbon footprint and it's X amount, right? But you don't know where the money's going. And actually very often you can't really relate that back to a project. So one of the things which we're doing to raise awareness is we made a recent announcement with a blockchain called Zilliqa, which is a layer 1 blockchain. And we said, look, all of a sudden their brands have the ability for their consumers, based on their purchasing behavior, the brands basically giving them loyalty points. Think of them as green loyalty points or ZILs as a form of reward, because related to that footprint. So the company is actually saying, okay, I have a footprint, but I'm paying for that footprint. Those consumers now have the ability to allocate that to specific projects. And if they don't want to go through the hassle of that by the app, then that can be done, by us as well, or via the platform. But all of a sudden now, a bit like, it reminded me a little bit of, I go into Waitrose because it's the only supermarket locally, not because I'm posh, right?
You can be posh,
You go to the counter and they give you this green token. And then all of a sudden, they've got this kind of piggy bank of 3 projects that are local community projects. Mm-hmm. One could be helping the blind, another one could be helping the elderly or the infirm, and a third one for food banks or whatever. And you can choose which one you put it into. Now, all of a sudden, I made a buying decision, and rather than give me a loyalty point, I've now got this token that I can deploy into the community that Waitrose then pays for. Now, I think increasingly we're going to see this model. And that's going to be very, very beneficial for us because, especially on this side, you've seen companies now say, okay, what I'm doing is having an impact. Let's say now Nike's growing cotton in an African country. Now that has impact because there's water use, there's environmental degradation, there's a carbon footprint all the way across that supply chain. Firms like that are now willing to pay for forward financing, the ability to build infrastructure and improvement to replenish what they're taking away. And that's a great opportunity for us because as communities in Africa, we should be working together to now create the right projects, rather than be beholden to handouts or NGO money entirely. And that will drive economic benefit as well.
Excellent. Thank you. I have a couple of questions that I've received through my inbox, but I've sort of pasted them into LinkedIn so that we can all see. So the first one is a simple question. So you launched, first of all, when did you launch 013, and what has the market reaction be so far?
Yeah, so we actually in earnest, we conceptualized the project when we look at this going back August, September time. But we had the benefit of harnessing all the infrastructure that we built on traditional markets and digital assets, including the acquisition of an entity called Pictor, PYCTOR, that we made from ING Bank in July last year that's in the public domain. Now, what we then did was we realized if we put all this together, we could launch something quite significant. So we set about working on that, which then meant at the end of Q1, as we headed into April, we announced the first live transactions, April, May time, which were linked to the ISDA standards, International Swaps and Derivatives Association standards. And then ISDA is, for the benefit of our listeners, is very well known because a lot of transactions that happen over the counter between corporates and banks and between themselves use ISDA agreements as a mechanism for standardization and trust. So we did that. Now we've got 65 million carbon credits in our ecosystem. Recently working with a partner, XDCC, they launched using those credits in our infrastructure, the world's first structured product on voluntary carbon credits. Why is that important? All of a sudden, if you securitize this product, it means through public markets like Deutsche Börse in Frankfurt, Bermuda Stock Exchange, SETDEX as an exchange in the Seychelles, you can now distribute that to both retail players, retail investors, and institutional investors that are used to buying stock, shares, or bonds in the public markets. So it also increases the ability to bring in finance and get a better price for those types of credits. So the market's now scaling. I would say in a global basis, we're still at an early stage in terms of carbon markets because the infrastructure is kind of evolving. But but we're embracing an approach where we have to collaborate because no one entity can do everything.
Yeah.
So we have a network, you have a network, Tony, with what you're doing. We all have networks, whether those networks are digitized or not. One good thing that's coming out is a lot of these players that were deploying capital or selling carbon credits have realized you must have a platform in the middle of this.
Yeah.
Whether it's our platform connected to something else or whether it's any other type of platform. And that's key.
Excellent. So just a couple of questions here because we're actually going towards the end because I know we can spend a whole day talking about that, but also have to respect your time here and there. I think you're kind enough. I know you're very busy. You're traveling soon. You told me, I think it's tomorrow or something like that. So a couple of questions for me that I've also received. So how does 013 work to connect? You may have responded to that already, by the way. That's okay. Just let me know. Connect to various stakeholders like registry, banks, markets, etc., to achieve net zero emission goal.
Yeah, so what we've had, like we say, look, application programming interfaces aren't going away. Like Swift is a messaging network. You have open banking now with APIs. And so on the one hand, what we do is we interconnect registries using APIs as well, where they're not digital. On the other hand, if registries are running on blockchains, we connect those registries as well directly. That means all of a sudden you've got end-to-end digitization and those assets are available in the ecosystem. On the other hand, with banks, we're doing a number of things where we're connecting deposit tokens that some of the banks have introduced that are digitized forms. It's a variation on cryptocurrency, but on secure networks that the banks have produced. We also reflect digitally money available on account, because if someone's buying and someone's selling, someone's got to pay. And someone's got to have the credits delivered to them digitally, whether it's in their wallets or whether it's in a custodian infrastructure. So we've got infrastructure that also acts as the escrow there, because you can lock these transactions, because then, Tony, if you're buying you've got the assets that are going to be delivered to you, or if I'm selling an asset, I'm going to receive the money. So that's what we're doing. But to add to that, we also know that services like whether it's credit ratings, whether it's the ability to bring in standards to measure, report, and verify, we're connecting those standards and making them available to participants. So all of a sudden, participants on the network also become collaborators with each other as well via the network, which also then creates a multiplier effect for everyone in terms of potential income and net benefit, whilst also addressing climate change positively.
Excellent. So let me just ask you the last question here. I have to stop you here for a while. You're gonna keep on coming. So guys, if you have questions, just keep asking the question in the comment box. And what I do, we respond to that, or here and there we'll come and have a look at that later. But let me just showcase the last question that I've received here. So what advice would you give to other entrepreneurs looking to build startup in the intersection of fintech and climate tech? So any key insight on challenges and opportunity you found?
Yeah, I mean, it's always harder than you think as well, by the way, because 12 years on now, I almost thought, everyone used to talk about, yes, you do this in 5 years, you get the benefit of that, and then you move on to the next thing. But actually, everything's evolving. It's a really exciting time in markets. Obviously, there's a huge amount happening in climate tech and climate fintech, and that coming together is key, because you need the innovation, but you also need the access to capital, and combining the two is key. But we're at the intersection now where there's never been as much technology as we have now, because you have, on the one hand, blockchain, artificial intelligence, IoT, you have quantum computing as well now that's now fast evolving, and the possibilities to harness these technologies and innovate is more so than ever. And I think the opportunity itself is, look at what tangible benefit that has. Don't be afraid to pivot or amend what you're doing. Like I said, we went from what we're doing 80% to 80% now on the climate side, which 2 years ago we wouldn't have envisaged, because we saw an opportunity. So, and also learn from others. There's a wealth of information out there. I learn from you, Tony, every time we discuss things, and that cross-pollination is important, because that's part of the education process. Therein lies the opportunity.
Excellent. That's a brilliant conversation. So brilliant response as well. So Hirander, so thank you very much for your time, taking out of your very busy schedule just to come and talk to us, and also telling us about your new innovation with the 013, this fantastic platform that people have to look, to aggregate the number of service that was present separately before. So really a pleasure. And like I say, for people that have missed this conversation, obviously you can watch it later. It's recorded. It's going to be on the platform, various platforms, on LinkedIn, on YouTube, on Facebook, but also X. So definitely there's a lot of places. And also, if you want to reach out to Hirander, you can definitely reach out directly to him on LinkedIn, and I'm sure he will respond. He's very busy, but he always responds. So maybe one final word before I let you go, Hirander, you want to say? So just give you the floor for a final word before I can let you go.
Yeah, no, thank you, Tony. It's a pleasure to be here. I love what you're doing with renewables in Africa as well, and I look forward to further engagement there. And it's great to see you've got some wonderful projects in Rwanda and Kenya as well. And what I would say is, the climate challenge is immense, and it's going to take a combination of innovations, both from individuals and from corporates, and a range of corporates as well. It's real. It's great to see fantastic innovation and development out there. And I look forward to engaging with all of you, and hopefully also see some of you at COP28 as well, as we head to the end of the month into December. Thank you.
Excellent. Thank you very much for that. So I'll let you go, but definitely know that we're going to be in touch. Thank you, Hirander. Appreciate that.
Thank you, Tony.
Excellent. So what a wonderful conversation, guy, we had, right? It was fascinating exploration of the intersection of climate action, fintech innovation. A huge thank you to Hirander. Again, like I say, I've had him before. He's back with us, for sharing, your experience founding, pioneering companies like GMX Group, 013 today. Clearly your passion, insight into how we can leverage, these emerging technologies to accelerate the transition to an inclusive, sustainable economic system, has been truly inspirational. And I definitely would encourage everyone to check out 013 and to consider how we might, each of us play a role in driving finance and technology for the collective good. The opportunity are immense, opportunity for impact, really, really immense, really great. Yeah. So thank you, Hirander, for that. So I wish you and the 013 team the best. And as you continue to lead the way towards a net zero, a climate aligned economy. So if there is anything that you would like me to modify or expand, so let me know, and I'm sure we're going to touch on that. And for you watching us, like I say, as usual, we are here to make sure that we bring you the best information. Our idea is to make sure that we can make renewables energy, clean energy, carbon finance seamless, right? To demystify that for you so that you can connect. So thank you very much for connecting. We're again going to be back next week with another expert call. But for the time being, guys, enjoy it. And I'll see you on Sunday for more video. Take care. Bye-bye.